All right, so we're diving into passive income strategies today
And specifically in the Chicago commercial real estate market.
with some amazing insights from Michael Linton.
A broker with over 38 years of experience in Chicago.
He's really an institution out there,
He is
and he shares a ton of his knowledge on his website.
ChicagoDealFlow.com.
That's right.
And we're going to kind of bring that to life a bit today.
Yeah, using some real-world examples of how this stuff actually plays out in Chicago neighborhoods.
But before we get too far,
Yeah.
we should probably define what passive income actually means in the world of commercial real estate.
You're right, because it's a term that gets thrown around a lot.
It does.
So what are we really talking about here?
Essentially, we're talking about generating consistent cash flow with minimal day-to-day involvement.
So not totally hands-off,
Not completely, no.
but creating a system that works for you even when you're busy with other things.
Right, exactly.
And Chicago, with its stable market and diverse neighborhoods, seems like an ideal place to be exploring these strategies.
Absolutely.
So why is that?
Well, think about it. Chicago offers stability, diversification potential, and the chance to build long-term wealth.
And you don't have to become a full-time real estate mogul.
Exactly. And let's not forget the potential tax advantages.
Oh, yeah. Those are nice.
Always a bonus.
Okay, so Michael highlights a bunch of different passive income strategies.
He does.
But let's start with one that I know a lot of people are curious about. Triple net leases.
Or NNN leases.
Right? NNL is...
These are really popular.
Yeah, especially in the suburbs.
Yeah, and they offer a truly hands-off approach.
Because the tenant covers most of the property's expenses, right?
Exactly. Things like property taxes, insurance, even maintenance.
Wow. So imagine this. You own a standalone retail building in, say, Schaumburg,
Okay.
and you've got a national pharmacy chain locked into a long-term NNN lease.
Sounds pretty good.
You're essentially just collecting rent checks without dealing with the day-to-day headaches of managing that property.
That's the idea.
And in stable suburban markets like Libertyville or Lake Zurich, those NNN leases can offer some pretty predictable long-term income streams.
They can, but there are some things to keep in mind.
Like what?
You need to carefully vet tenants, scrutinize lease terms, and just really understand the potential risks.
Which vary depending on the specific property type.
Of course.
All right, so that's direct property ownership with NNN leases.
Right.
But what if you don't want to deal with owning a property directly?
Well, then you've got real estate investment trusts.
Or REITs?
Yeah, REITs are like a gateway to large-scale commercial properties without the burden of direct ownership.
So you're basically buying shares in a company that manages a portfolio of properties.
Exactly, and those portfolios often specialize in specific property types or even areas within Chicago.
So someone who doesn't have millions of dollars lying around to invest in a skyscraper can still participate in that market.
Right, think about those Class A office towers in the Loop.
Oh yeah, the fancy ones.
You have REITs that specialize in those very properties.
So you're benefiting from the expertise of the REIT managers.
And the income that those properties generate.
But REITs, like any investment, have their own risks.
Of course, you always need to do your research.
Understand the REIT's track record, their investment strategy, and be aware of how market fluctuations can impact their performance.
Right, it's not a guaranteed win.
Definitely not.
Now let's shift gears to a different type of property.
Okay.
Multifamily property.
Apartments.
Exactly, they might seem less passive at first.
Yeah, because you think about dealing with tenants and repairs and all that stuff.
Right, but with the right approach, they can actually generate pretty consistent income.
Okay, so walk me through this.
Imagine a 50-unit apartment complex in Hoffman Estates,
Oh,
targeting young professionals and families.
got it.
Now you hire a professional property management company.
That's the key.
And suddenly you're collecting rent checks without dealing with leaky faucets or tenant complaints.
You're much more hands-off.
Exactly, and Chicago's suburbs are seeing a lot of growth, which makes them attractive for these types of investments.
Like places like Crystal Lake and Elgin are seeing an influx of new residents,
They are.
which drives the demand for rental units.
It does.
But location is still key, right?
Absolutely. You need to understand the demographics, the job market, the growth potential of an area.
To really succeed with those multifamily investments.
Right.
All right, now let's talk about technology.
Okay.
Because there are these new platforms for commercial real estate crowdfunding.
Yeah, it's really interesting.
So how does this even work?
Think of it as pooling your resources with other investors.
To participate in larger projects.
Exactly, projects that you wouldn't be able to access individually.
So these platforms open doors to prime Chicago markets that might have been out of reach before.
Right, you could invest in a piece of a mixed-use development in the West Loop,
or contribute to revitalizing an up-and-coming neighborhood.
all with a smaller amount of capital,
It's kind of like owning a slice of the Chicago real estate pie.
without needing a fortune to get started.
But are there any downsides to this crowdfunding approach?
Well, you need to be just as careful as you would with any other investment.
So do your research on the platform and the specific project.
Exactly. Understand the fees involved, the project's timeline, the potential for delays.
Or any unexpected costs.
Of course, it's not a get-rich-quick scheme.
Right. Due diligence is key.
It always is.
Okay, now what about those investors who are ready to invest larger sums of money?
For those folks, private equity real estate funds offer a different avenue.
And what's the advantage there?
Well, they pool capital from multiple investors to acquire and manage diversified portfolios of commercial properties.
So instead of putting all your eggs in one basket,
You're spreading your risk across different properties and different areas.
and you're tapping into the expertise of those fund managers.
Exactly. They specialize in specific property types and submarkets.
So imagine a fund that focuses on, say, value-add office properties in the O'Hare area or along the East-West corridor.
Right. They see the potential in those areas, and they have the experience to maximize returns.
So we've covered NNN, leases, REITs, multifamily, crowdfunding, and now private equity funds.
It's a pretty good range of strategies.
It is. And Michael actually goes even further.
He does.
He talks about some more innovative approaches to passive income in Chicago commercial real estate.
Yeah, he's always got his finger on the pulse of what's happening in the market.
So what are some of these more outside-the-box strategies he suggests?
He dives into things like covered land plays, which involve buying those underutilized properties.
With existing income.
Right, but with an eye towards redeveloping them in the future.
So essentially, you're playing the long game here.
You are. You buy a property for its current cash flow, but bet on its appreciation as the surrounding area develops.
So where would this work well in Chicago?
Well, think about rapidly developing areas like Logan Square.
Yeah, that's a hot neighborhood.
It is, and you could acquire, say, an aging strip mall there.
Collect rent from the existing tenants.
Exactly, and then as the neighborhood evolves, redevelop that property into something more aligned with the changing character of the area.
Something more trendy.
Right, like lofts, co-working spaces, maybe even boutique shops.
So you're riding the wave of gentrification.
And hopefully maximizing that property's value over time.
This sounds like a high-risk, high-reward type of strategy.
It can be, but with the right due diligence, market knowledge, and a bit of vision, it can also be incredibly lucrative.
And that's where someone like Michael comes in.
Absolutely. He can help you identify those hidden gem properties.
And navigate all the complexities of those redevelopment projects.
Exactly. He's got the expertise and the connections.
Okay, what other innovative strategies does Michael suggest?
He also talks about investing in distressed commercial REOs.
What are those?
They're bank-owned properties that have been foreclosed on.
So like the fixer-uppers of commercial real estate.
You could say that.
But how do they fit into passive income?
Well, they require some work up front.
To stabilize the property.
Right, maybe renovate it, secure new tenants.
But once that's done...
You could be looking at some significant long-term passive income.
So for example, imagine you buy a foreclosed office building in, let's say, Niles.
Okay.
Give it a makeover and then lease it out to multiple tenants.
It's not completely passive.
You know, but the potential payoff could be worth it.
It could.
Okay. Any other outside-the-box strategies from Michael?
He also explores something called adaptive reuse for short-term rentals.
What's that all about?
It's basically transforming those underutilized commercial spaces into something totally new.
And something that can generate income.
Exactly. Think about converting a former warehouse in River North
Oh.
into stylish loft apartments for short-term rentals.
That makes sense.
Or maybe transforming a historic building in Oak Park into boutique hotel rooms.
Catering to tourists.
Right. It's all about seeing the potential in what already exists.
And creating something unique and valuable.
And with the right marketing and management.
Yep.
Those adaptive reuse projects can generate substantial passive income.
Okay, so we've explored a wide range of passive income strategies.
From the traditional to the unconventional.
But before we get too excited about specific properties,
Right.
Michael emphasizes something really important.
What's that?
Understanding Chicago's diverse neighborhoods and their unique market dynamics.
He's absolutely right.
Because what works in one area might not work in another.
Exactly. Chicago is a city of neighborhoods.
Each with its own story to tell.
And its own investment potential.
So we need to shift our focus now.
From strategies to locations.
Exactly. Put on our explorer hats and dive into the nuances of different Chicago neighborhoods.
I like it.
And that's exactly what we'll do in part 2 of this deep dive.
Sounds like a plan.
We'll uncover some hidden gems.
And explore the opportunities that each area has to offer.
Stay tuned.
We'll be right back.
Welcome back to our deep dive into passive income strategies.
In the Chicago commercial real estate market.
We've covered a lot of ground already. We have exploring different approaches to generating passive income.
But as we discussed,
Yeah.
Chicago is not just one big market,
No, it's really a collection of vibrant neighborhoods
each with its own unique flavor.
and its own investment potential.
Exactly.
So understanding the nuances of each submarket is crucial
It really is.
for making those informed investment decisions.
Like choosing the right ingredients for a recipe.
I like that analogy.
You can't just throw everything in and hope for the best.
So let's put on our explorer hats
Okay.
and journey through some of these Chicago neighborhoods.
Sounds good to me.
Where should we start?
Well, Michael highlights a few key areas in his work
Okay.
that offer some distinct opportunities for passive income investors.
All right, let's hear about them.
Let's start with Naperville,
Okay, Naperville.
a suburb that consistently ranks as one of the best places to live in the U.S.
Yeah, Naperville has a great reputation
It does.
for excellent schools, safe streets, high quality of life.
It's a magnet for families and professionals.
It is. But what makes it stand out from a real estate perspective?
Well, beyond that desirable lifestyle, Naperville also boasts a strong and diversified economy,
Which translates into,
a stable and resilient real estate market.
so it's the kind of place where people put down roots,
Exactly.
which is a good sign for those long-term investments.
It is.
So it's not just about the charm.
It's not just about the surface
It's about the underlying economic fundamentals.
that support a healthy real estate market.
Exactly. So what specific passive income strategies might be a good fit for a place like Naperville?
Well, given its family-friendly demographics and thriving retail sector,
Okay.
NNN lease investments could be a really solid option.
I can see that.
Imagine owning a retail property leased to a well-established grocery store chain.
Or the popular national restaurant brand.
Exactly. Those tend to be pretty reliable tenants.
With those long-term leases,
Right.
providing that predictable income stream.
That's the idea.
So it's about tapping into the needs and desires of that local community.
That's-
What about multifamily properties? Would they be a good fit for Naperville as well?
They could be.
Yeah.
There's definitely a demand for quality rental units there.
Especially in well-maintained communities.
Right.
With appealing amenities.
Think townhouses or garden-style apartments.
Targeting those families and young professionals that are moving into Naperville.
That's the sweet spot.
Okay, so Naperville is all about stability, strong demographics, meeting the needs of a thriving community.
That's a good summary.
Let's shift gears now and head over to Oak Park,
Okay, Oak Park,
another suburb
a historic suburb.
known for its beautiful architecture and vibrant art scene.
A very different vibe from Naperville.
It is. Oak Park attracts a different kind of resident and investor.
Definitely.
People who value history, community, a strong sense of place.
It's got a unique character.
Absolutely. I mean,
Yeah.
Oak Park is synonymous with Frank Lloyd Wright.
And those stunning prairie-style homes.
Exactly. So I can see why it would appeal to those seeking a more distinctive living experience.
For sure.
But how does that translate into passive income opportunities?
Well, imagine owning a historic building
Okay.
that you've carefully restored
Uh-huh.
and converted into charming boutique hotel rooms.
I love that idea.
Or stylish vacation apartments catering to tourists who want to experience Oak Park's architectural legacy.
That's a fantastic way to tap into Oak Park's tourism market
It is.
while preserving its unique character.
It's a win-win.
What other passive income strategies might be well suited for Oak Park?
Given its walkability
Oh, yeah?
and its vibrant downtown area,
It has a great downtown.
multifamily properties with ground floor retail could really thrive there.
So picture apartments above those independent bookstores,
Or cozy cafes.
those little art galleries.
Yeah, that kind of mixed-use development.
It really aligns with Oak Park's vibe.
It does.
I love that. It's creating a dynamic and integrated community.
Where people can live, work, shop,
Experience the local culture.
all within walking distance.
Okay, so we've done Naperville.
The stability, the charm.
Now let's venture into the heart of the city
Let's go.
and explore Logan Square,
Okay, Logan Square.
a neighborhood that's been experiencing a wave of gentrification in recent years.
It's definitely a hot spot.
Known for its trendy restaurants, hip bars, those independent boutiques.
It attracts a younger, more creative crowd.
It does.
For sure.
So what kind of passive income strategies might be particularly effective in this environment?
Well, Logan Square is a prime example of where those covered land plays we discussed earlier
Well,
could be incredibly strategic.
remind me what a covered land play is again.
It's about identifying those underutilized properties
Okay.
with existing income streams,
Got it.
but with an eye toward future redevelopment,
Future redevelopment. Okay.
recognizing the potential in those properties.
That might not seem glamorous at first glance.
Exactly.
So in Logan Square,
Yeah.
you might acquire an aging strip mall,
Or a former industrial building.
collect rent from the current tenants.
Right.
And then, as the neighborhood continues to gentrify
You redevelop the property.
into something more aligned with its evolving character.
Exactly. So imagine transforming that old strip mall into trendy lofts.
Co-working spaces,
Maybe a curated marketplace
featuring local artisans.
and entrepreneurs.
So you're riding the wave of gentrification.
And hopefully maximizing the property's value over time.
This sounds like it could be risky.
It can be, but with the right due diligence,
Yeah.
market knowledge, and a bit of vision, it can also be very lucrative.
And that's where working with those local experts comes in.
People like Michael.
Yeah, who can help you identify those hidden gems.
And navigate the complexities of those redevelopment projects.
Exactly. So it's not just about spotting the potential.
It's about having the expertise and the guidance.
To actually make that potential a reality.
Right.
Okay, now what about neighborhoods that are maybe in the earlier stages of revitalization?
Let's head south to Bronzeville,
Bronzeville.
a neighborhood steeped in history and culture.
I've heard there's a lot of exciting revitalization happening there.
There is.
What's driving that change?
Well, there's a strong push to reconnect Bronzeville to the economic heart of the city,
Okay.
attract new residents and businesses.
Celebrate its cultural heritage.
Exactly. It's about honoring the past while building a vibrant future.
So it's about recognizing the inherent value of the neighborhood.
And its potential for growth.
So what kind of passive income opportunities might this create?
I think adaptive reuse projects could be very attractive in Bronzeville.
Okay, give me an example.
Imagine transforming a former factory into artist lofts,
Oh, I like that.
or a historic theater into a mixed-use development.
With retail, office space.
Maybe even a community performance venue,
It's about breathing new life into these historic structures.
while honoring their past.
Yeah. What other passive income strategies might work well in Bronzeville?
Well, multifamily investments could be a smart move there, too.
As the neighborhood attracts more residents and businesses.
Right, the demand for quality rental units is likely to increase.
So think modern apartment buildings with amenities and a sense of community.
Exactly.
So it's about positioning yourself for the future growth of the neighborhood.
And capitalizing on that increasing demand for housing.
But as with any investment,
Of course.
thorough research is key.
Absolutely.
Analyze those market trends. Understand the potential risks.
And the rewards.
So we've journeyed from the stability and affluence of Naperville,
To the historical charm of Oak Park.
the gentrifying energy of Logan Square.
And the cultural revitalization of Bronzeville.
It's clear that each neighborhood offers
A unique set of opportunities
and challenges.
for those passive income investors.
And that's just a glimpse.
Into the diverse tapestry of Chicago's neighborhoods.
There are countless other areas
Each with its own story to tell,
and its own potential to unlock.
waiting to be discovered.
It's exciting to see how these passive income strategies,
Can be tailored to specific neighborhoods.
capitalizing on their unique strengths and characteristics,
It's about understanding the DNA of a neighborhood.
and aligning your investments with its long-term trajectory.
Precisely.
But with so many neighborhoods to consider,
And so many factors to weigh.
how can investors make sense of it all?
That's where research, due diligence,
Yeah.
and partnering with those local experts becomes absolutely essential.
Okay, so let's dive into the practical side of things.
All right.
In part 3 of this deep dive,
We're going to get into the nitty-gritty,
we'll explore how to evaluate those specific properties
analyze their financial potential
and make informed decisions.
that align with your investment goals.
Stay tuned. Welcome back to our deep dive.
Into the world of passive income through Chicago commercial real estate.
We've made it to the final part.
We have.
And now it's time to roll up our sleeves and get into the nitty-gritty of actually evaluating specific properties.
Yeah, we've talked about different neighborhoods, various passive income strategies.
But now it's about putting that knowledge into action
Right, how do you assess a property?
and figure out if it's the right investment for you.
Michael emphasizes a really systematic approach here.
Okay, so moving beyond those gut feelings.
Exactly, you got to look at the numbers.
So what are the key steps involved?
Well, the first step is to really dive into the property's income and expenses
Okay, so we're talking about examining those leases, understanding the rental rates.
and scrutinizing those operating expenses.
It's like creating a financial x-ray of the property,
You could say that.
seeing how much money it's generating and how much it costs to keep it running.
Exactly. You want to determine what's called the property's net operating income,
Or NOI.
NOI. That's the lifeblood of your investment.
So how do you calculate that?
It's pretty simple. You subtract those operating expenses from the revenue the property generates,
Okay, so that tells you how much profit the property's making.
before accounting for things like mortgage payments or taxes.
So that's the bottom line.
It is, and a healthy NOI is absolutely crucial for any successful passive income strategy.
Got it. So we've got the NOI figured out.
Right.
What's next?
Well, next you need to figure out the property's capitalization rate.
Or cap rate,
Cap rate, think of it as the property's rate of return.
expressed as a percentage.
Exactly.
I've heard that term thrown around.
It gets used a lot.
But can you break it down for us?
Sure, it's basically a way to measure the potential return on your investment.
Okay.
You calculate it by dividing the property's net operating income by its market value.
So, for example, if a property has an NOI of $100,000 and a market value of $1 million.
Its cap rate would be 10%.
Okay, so a higher cap rate generally means a better potential return.
Generally, yes, but it's not always that straightforward.
Because,
A higher cap rate can sometimes signal higher risk.
so there's a trade-off there.
There always is. A lower cap rate might mean lower returns, but potentially lower risk as well.
It's that classic risk-reward balance.
Exactly.
But how do you know what's a reasonable cap rate for a property in a particular neighborhood?
That's where market research is really important.
So looking at comparable properties in the area.
Exactly. You need to compare cap rates to see what's considered a good deal in that market.
So benchmarking the property against its peers.
Essentially, yes.
Okay, so we've looked at the income, the expenses, the cap rate.
Right.
What else do we need to consider when evaluating a property?
Well, you also need to look at the property's lease structure.
Because we're looking for leases that will provide stability and predictable income.
Over time, exactly.
So what should we be paying attention to here?
The lease terms, the length of the leases, the rental rates,
Are there options for renewal?
any rent escalation clauses,
You want leases that are in line with market rates.
and that offer favorable terms for the landlord.
Of course. Now, what about the tenants themselves?
Tenant quality is crucial.
So what should we be looking out for there?
You want tenants who are financially stable,
Okay.
with a good track record of paying rent on time,
It's about mitigating risk.
and ensuring that consistent stream of income.
So how do you assess tenant quality?
You can do credit checks, review their financial statements,
Research their business history?
talk to other landlords who have experience with them.
So really doing your homework.
Due diligence
Okay.
is key here.
And don't forget to actually look at the property itself.
Right, the physical condition of the property can't be overlooked.
Because those unexpected maintenance costs can really eat into your profits.
A leaky roof, an
Yeah.
outdated HVAC system.
Those things can turn a passive income dream into a nightmare.
So a professional inspection is a must,
To identify any potential issues.
and help you factor in those necessary repairs or upgrades.
Okay, we've covered a lot of ground here.
We have.
From market analysis and number crunching to lease scrutiny and property inspections.
But once you've identified a promising property,
Yeah,
how do you move forward?
that's a great question.
This is where negotiation and legal expertise become really important.
Because these deals can be complex.
They can be, and Michael stresses the importance of having a team of experienced professionals
Like real estate attorneys and brokers.
who can guide you through the whole process.
They can help you negotiate favorable terms.
Structure the deal to minimize risk.
Make sure all the legal documents are in order.
They're your advocates.
So as we wrap up this deep dive,
Yeah.
what are your final takeaways for those eager to unlock the potential of passive income through Chicago commercial real estate?
I think the biggest takeaway is knowledge is power.
The more you understand the market,
The better equipped you'll be to make those informed decisions.
so embrace that ongoing learning.
Attend industry events. Connect with experts like Michael.
Absorb those insights.
And don't be afraid to think outside the box.
Because Chicago's real estate market is dynamic.
Opportunities are emerging all the time.
Explore those unconventional approaches.
Spot those hidden gems.
And be willing to seize those opportunities.
And finally, remember the power of collaboration.
Build that network of trusted advisors.
Leverage their expertise.
Surround yourself with people who can support you on this journey. So if you're ready to explore passive income in Chicago's commercial real estate market,
Michael Linton is a fantastic resource.
his website, chicagodealflow.com, is a treasure trove of insights.
And practical advice.
Head over there, connect with him
And get ready to unlock the potential
of this exciting market
Thanks for joining us on this deep dive. We'll see you next time.
for another fascinating exploration.